Smart Money Show with Cavmont. Welcome to it. My name is Kafland in the studio. We're joined by Ingrid and Nathan from Cavmont, and it is the Smart Money Show brought to you by Cavmont. We'll get straight into business, and I know that we'll be talking about monetary policy with you, Nathan.
Yes.
And before we do that, I know that the kwacha hasn't been faring very, very, very well, and I know that a lot of people this morning would love to know how it's faring as of yesterday. If you have any information, and maybe today, if we have any new information on how it's faring, and then we get straight into what we're looking at today.
Okay, on the contrary, the kwacha has actually, for the past week, fared pretty well.
Yeah.
Because I think last time I was here, we were talking of the kwacha hitting the levels of 13. Then it broke those barriers last week, or was it the other week? Hit up to, I think, 14.5. I think that's what was been shown in most commercial banks, their board rates. So last week, we saw the kwacha come down to levels of 12.75, which I can say was pretty impressive.
Right.
Yes, so I think some of the issues that led to the kwacha coming to those levels, issues to do with the MPR, the monetary policy rate. And basically, we saw quite some supply on the market. So I wouldn't say it's doing bad. I think it has improved. Even though on Friday we saw a sharp... So we saw the kwacha appreciate very strongly. So coming from the levels of 14.5, it came down all the way. I mean, every hour it was pushing down. It came down all the way to 12.75, like I mentioned, right? But then, as of closing, midday as of closing on Friday, we saw the kwacha start pushing back up again. So it closed the week at 12.93, 12.95, around those levels. Yeah, pretty much. But compared to what it was before, I think we're still faring pretty well.
Right.
Yeah.
How does the future look like? How does this week look like?
How does this week look like?
Yeah, any projections?
You know why that question is so funny? Because last time I was here, I gave you an outlook on how the kwacha was going to be, and I told you the barrier for the kwacha was going to be 13.
2014. So he doesn't want to commit.
You were like a
himself.
prophet of doom.
Yeah, so it makes my job a little bit harder here. But I think we saw some supply last week. And if we continue seeing that supply, I think that rise in the kwacha as of midday Friday is temporal. So we might see it maybe roam around the levels of 12.75 to 13. That's what we're looking at. But I might be wrong. Yeah.
Okay.
Let me put that disclaimer today.
All right.
Sorry, just a question. Did the rate come down or improve? I don't know what the correct language would be.
Okay.
Because of the BPR?
Yeah.
The change in BPR?
Okay, I think the other thing was sentiment, because investors have slightly come to a halt when it comes to investing in our government bonds and treasury bills. So now there was sentiment that there'll be some sort of tightening of the monetary policy. So I think that sentiment pushed some sort of liquidity on the market, which caused an appreciation in the kwacha, pretty much.
Okay.
Yeah.
Great.
And as per the usual, again, we have obligations for month end. This is 27th, right? 27th, yeah. So we have tax obligations for the month end. Those are also a factor when it comes to helping the kwacha. So if you take note, at every month end, we see some sort of appreciation in the kwacha, because we see a whole lot of inflows coming in to settle those tax obligations. Yeah, pretty much. Yeah.
All right. Now, Nathan, we do know that there's a new monetary policy rate that was announced last week, Wednesday, by Central Bank.
Yes.
Now, kindly just briefly explain what the new monetary policy rate is and what effect it has.
Okay, so I can begin by explaining briefly what monetary policy is. So this is typically a process by which a central bank or a monetary policy board or a currency board, it's a measure in which they try to control inflation by either tightening money supply, they would either tighten money supply or expand it. So how do they do that? They do that by increasing interest rates or decreasing interest rates. So in the case for Zambia, what happened is they ran a tightened monetary policy. So it's pretty much the same as what was done in the US by the Fed, whereby they increased their rate. I think it was every quarter. I think they were increasing their rates almost every quarter. So the same thing for us. So the government has decided to run a a tightened monetary policy by increasing the rate from 9.75% so they put 50 basis points, so which brings it to 10.25%. So what that will do, it will generally increase the cost of borrowing, right? So money supply will be a little bit tight on the market, right? So also what it will do is so let me give an example of the US. When there was an increase in the policy rate, we saw the US dollar gain value against most major currencies, right? So what happens now in that situation is that for the same situation as Zambia, when there's an increase in the policy rate from 9.75 to 10 the government or the Bank of Zambia looks to improve on the power of the kwacha, right? So that brings in more investment, because now you see, if you're an investor and you are investing in a product that gives you an interest rate of 9.75%, so if you are offered a product of 10.25%, wouldn't that be a better deal for you? Exactly, because now you have got more interest. So now we'll see more foreign currency coming into the country, so that they can now have better investment or better returns on those investments that they're planning to do. To break it down further, so maybe I explained it last time, but you see, when foreign currency comes in the market, it's not invested as foreign currency. It has to be changed to kwacha. So when it's being changed to kwacha, what is happening there? We're seeing more supply and more demand for the kwacha. So there's more supply of foreign currency, more demand for the kwacha, which in turn makes our kwacha stronger. So I think that was the whole rationale behind the Bank of Zambia increasing the policy rate, so that they can give more power to the kwacha and also curb inflation. I think they want to keep inflation around levels of 6% to around 8%. The basic definition for inflation is that, I think the one that we all know, a lot of money chasing few goods. So if you tighten money supply on the market, so which means there's not a lot of money anymore, right? So which means the inflation comes down, or in this case reduces. So I think that was the whole point of the government increasing the monetary policy to 10.25%. Yeah, pretty much.
All right. Now, costs and revenues tend to be impacted with a volatile currency like our Zambian kwacha.
Okay.
What would you say would be the best course of action for these companies?
Best course of action. Let me put it in one word. I think the best course of action for this kind of currency that we're experiencing in our country would be derivatives. And I mentioned it last time. I think you were the one who was blasting me on those questions. So pretty much, I think I would encourage most corporates to start trading in derivatives. To be specific, I would say forwards. Because when you initiate a forward, what happens is you lock in a price for yourself. So you know at what price you have costed the goods, or whatever you're shipping in, or whatever goods you're trading in. So you would have known what price it is. Usually the forward price is a little bit or slightly higher than the spot price. So spot price is the price you're going to get today. Forward price is the price you're going to get as per whatever date you want in the future, right? So the forward price is determined at what the spot rate is today, given the interest rates on the kwacha and whatever currency you're trading in. So it's usually a little bit higher than what your spot rate is. So now, most corporates would find it a little bit hard, because you see, they'll go in a bank and look at the rate and say, you know what, today I'll get 12.75% or 12.75 per dollar, right? But if I lock in a forward, it's showing me 12.9 or 13, which is a little bit pricey to purchase the dollar at those levels. But you see, what happens in that case is you would have locked in a price for yourself. So whether the rate in the next 5 months, if you locked in a forward for 5 months, if the rate goes to 14, if the rate goes to 15, you know what your price is. You locked in a price for 12.9 5 months ago. So at least you would have, the fluctuation will not affect you in any way whatsoever. So corporates should engage in derivative products, knowing that we have such a currency nowadays. But at least they would know how to cost their products. That would not affect them, or would not affect the operations of their business. Because if the rate is going up every day, today you do not know where it is, which means even you, if you sell phones, for example, which means every day you'd have to be changing prices in your shop. So if the rate goes to 15, on your next consignment of orders, which means you have to adjust your rate to 15. If the rate comes down to 5, in your next consignment, you have to adjust your rate, your prices down to 5, which is, not practical. So the best way to take it up is do up forwards, lock in your prices, know what your costs are, and this volatility won't affect you. So I think that's what I would advise most corporates.
With us in the studio is Nathan and Ingrid as they get to give us a smart money show. And earlier we were talking to Nathan. Right about now we move on talking to Ingrid as she gets to share with us 5 things that somebody did to survive their in between jobs phase. Ingrid.
Yes. So you're working, right? You're very happy, you've got your job, you feel secure. Tomorrow you come in, Christian Voice is downsizing, Diamond TV is downsizing, Cavmont Bank is downsizing, and we all don't have jobs. And hopefully, we've been keeping some money in our emergency funds, and we know we can survive for the next 6 months, right? But we still need to have a few tips on what to do, okay? Because being unemployed in a developing country like ours is a different story from being unemployed in a country which is developed. They've got systems in place where you can maybe get unemployment benefits, you can go on some kind of welfare. So every month you'll have income coming in. But if you suddenly lose your job, like it actually has happened to me in the past once, you just find that, oh my goodness, I have no source of income, no regular source of income. So what do I do? The first thing that I need to do is to make sure that I get myself together and I plan how I'm going to survive until I get my next job. So one of the first things that I need to do is how I'm going to stay sane and keep financially healthy while I'm in this between job purgatory, as I'm going to call it, Because if you're not careful, the hell that is extended unemployment rather, can go on for a very, very long time. So you need to make sure that you don't stay in this purgatory for a very long time. So the first thing that you need to do is to take up temporary work. So if you find somebody is offering you a gig, something to do for 2 weeks, take it up.
Right.
But be very discerning, okay? Because sometimes what you find is that the jobs or the freelance works that people may ask you to take on will actually need a lot of effort from you. They are time consuming. You may find yourself having to spend money on transport. You find that somebody says, I'm doing a research, I need you to go out and get people to fill in surveys, and then you have to do the report for me, so you're spending time on a laptop. If you don't have a laptop, you may have to go to a business center. You're going to spend money having to type on their on their computers. So make sure that whatever temporary work you're taking on is going to be financially beneficial for you.
Right.
So you must take into consideration all those things I've talked about. How much time am I going to spend on this thing? How much effort am I going to have to put in myself physically? How much money am I going to spend on transport? Am I going to have computer bills? Am I going to have business center bills? So look at all of things. Do I have to phone anybody? How much talk time do I need to use? So make sure that when you are negotiating your package with whoever needs you to come on as a researcher, that you've calculated all of those things and you tell them, look, this is what it's going to cost me just to do this work for you. So that has to be packaged in. Because sometimes you'll find, everybody is looking to save money. So the person who's carrying out the research is going to also want to save money. But make sure that you're not the one who's going to help them to save money at your cost. So that's the first thing that you need to do.
All right.
Number 2, when we were working, we had a Visa debit card, right?
Right.
And it allows us to shop online. It allows us to walk into a shop and do our swiping. It allows us to fill in gas and swipe, okay? Because these days you also want to be secure and safe, keep your money safely, don't walk around with too much cash. But one thing that a Visa debit card also allows you to do is online shopping, okay? When you're not working, you can get depressed because you're feeling sorry for yourself. You're not employed. So you think, okay, I've got my savings. I've got a bit of money. I think I need something to make me feel good. So you go online and you find a pair of shoes that costs you $10 and you think, that sounds good. It's only 130 kwacha. And when you go to the mall, maybe a pair of shoes is 600 kwacha. So in your head, you think, this is a really good deal. It's cheap. Let me buy this. What you're forgetting is that you have to pay for transport costs to come, for courier charges, to come from wherever you're buying from, which will probably be the UK or the US. You have to pay the courier company to bring it here. First of all, you have to pay also the delivery charges within that country, which will be in dollars, which at last week was 13, you said, Nathan? The highest was 13 point something, isn't it?
Yes, please.
Yeah. The highest was 13, so that would be another 130 kwacha, which already brings your shoe to 260 kwacha. When that shoe gets to Zambia, the courier company that you've used is also going to charge you a fee for bringing it from the States or from the UK into Zambia. And I've ordered stuff before, and usually it's about 200 and something kwacha. So you end up spending 260 plus 2 something else, 500 kwacha already gone. There's no savings there. And then to make it worse, you are not working. So make sure you avoid shopping online. And one of the ways you can do that is by avoiding justifying to yourself. Okay? It's only $10, it's cheap. Stop the justification game. Okay? If you can, tear up your Visa card. Of course, in Zambia, we won't do that because you need it for our ATM transactions. And because if we go into the bank, they're going to charge me to withdraw money over the counter. So we also want to avoid those charges. So we just have to become very, very disciplined. We become careful about how we use our card and avoid shopping online and other shopping as well. Even just like stop going to the mall if you don't have to. Okay, because when I'm just going window shopping, I need to feel better. I'm feeling really low today about my situation, so let me go to the mall. What are you going to find? It's sale time, okay? And then you swipe, and that's it. Your money is gone. So leave your card at home if you have to. Avoid the unnecessary shopping. Your wallet will thank you. And 5 months into not having a job, you will be very, very happy that you had avoided that. The next thing that you need to do, number 3, is to be extremely careful of how you spend. So keep track of your spending, okay? When you have the burden of handling someone else's money, you can also become the best bookkeeper in the city. But when it's your own finances, we just become careless because it's my money. When I've got some, let's say you're on a kitchen party committee, okay, and you're chosen to be the treasurer. People will bring in money. You keep that money. You won't spend it because you know it's not your money. But when it's your money, you're the one making the decisions. It's my money. So you just become careless. But when you are not working, you are waiting for another job to come and you have no idea when it's going to come, be very, very careful of how you spend. Keep track. Walk around with a notebook if you need to. At the month end, make your budget. I need to pay my rent, 2 kwacha, 2,000. I need to buy groceries. When you're making your budget for your groceries, make sure you just do what you need. You do your basics. Whatever you can buy that would take you through the month. Okay, so you make a good budget for the month and then of course, because you know that your money is not coming in, you have also said this month, because I'm not working, I'm only going to spend, let's say, 5,000 kwacha from my emergency fund. So make a budget that will fall within the emergency fund amount that you've set aside for the month. So be very, very prudent and do not overspend because it's your money. And I'm going to stop at 3 because I think we are running short of time. And we will come back and finish them later on.
Right.
Yeah.
Okay. We need to finish this. I was learning something.
I mean, I learn all the time, like I always keep saying. I learn all the time. But the other thing that I also want to say before we go anyway is that when you're not working, is keep busy. I mean, keep your ear and eye out for opportunities that will come along. I was talking to a friend this morning and I was asking him, I was like, look, you've been retrenched before. What is it that you can do to help you when you're not working? For him, he was like, look at what skills you have as an individual and then see, what do I need? Like if you're in the service industry, find a need, okay? Find an opportunity, and then see how you can connect yourself to that opportunity. So somebody has a need. How can I fulfill that need? And then, use your skills. Get busy. Don't just sit at home wallowing and feeling sorry for yourself.
The emphasis on
Yes.
use your skills,
Yes,
use your skills.
Yes, yeah.
All right, Nathan, your closing remarks as we come to the end of the program.
Okay, I just remember that one of you really asked me what forward was. We talked about it last time, but just for those who are tuning in for the very first time today. So basically what a forward is, when you go on the FX market, you ask any dealer and ask them for a price to say, I want to buy dollars, and they'll give you a price at which you could buy dollars today. So a forward is basically the same price, but not for today, for delivery in the future. So you'd come to the bank and say, I want to buy dollars, but I do not want them today. I want to buy dollars, and you deliver them to me in the next 2 months. So that's what a forward is, just for those people who did not understand what a forward was.
Right.
Otherwise, we hope to see a very great trading week in our space, and hopefully we can interact with the corporates and pretty much in the financial markets. Yeah.
All right.
Ingrid, your closing remarks.
Where do they find us?
Exactly.
They can find us in all our branches in the country, but they can call us on 3333, and there is you, dear customers and viewers and listeners. You can call us on 3333 from your MTN and Airtel lines. You can call us on 0800 100 3333 from your Zamtel line. You can also find us on Facebook. You can watch us on Diamond TV on Tuesday at 19:30. You can find us on Twitter, and you can write to us at customerservice@cavmontbank.com.zm.
All right. This has been the Cavmont Smart Money Show. And, it's been great having you two in the studio today.
Thank you.
Thank you.
As always.
Yes.